In this presentation, we will take a look at multiple choice questions related to governmental accounting, going through those questions and then practicing test-taking skills with them. First question, funds to use if grant money is received and must be segregated and used for counseling elderly. So we have a specific purpose, either A, private purpose trust fund, B, enterprise fund, C, special revenue fund, D, elderly fund. Let's go through this again using the process of elimination. Funds to use if grant money is received and must be segregated and used for counseling elderly. Either A, private purpose trust fund. I'll keep that for now. And then B says the enterprise fund. That's one of the proprietary type funds that we use if there's usually kind of like a customer type situation. Doesn't sound like that's the one here. C says special revenue fund. And so possibly if we have a special thing here, and then D says elderly fund. And that sounds somewhat reasonable. I'll keep it for now because it's, that's what the purpose is. So let's go through it again. Funds to use if grant money is received and must be segregated and used for counseling elderly. Either A, private purpose trust fund, C, special revenue fund, or D, elderly fund. Now, I don't think D is an actual fund typically, so I don't think that's going to be it. Private purpose trust fund or the special revenue fund. Of the two, we're looking at the special revenue fund. And that's going to be the situation where we have some type of restriction such as this. We've got money that's coming in. It's got to be used and applied to a specific purpose. And therefore, we want to make sure that the money coming in is applied to the purpose that has been defined. To do so, we use C, special revenue fund. Next question. Funds to use for a carpool that services only government vehicles for a fee. Either A, private purpose trust fund, B, enterprise fund, C, auto fund, or D, internal service fund. Let's go through this again using the process of elimination. Funds to use for a carpool that services only government vehicles for a fee. Is it A, private purpose trust fund? So again, a trust fund, anytime you see the word trust, it's going to be like a fiduciary type of fund. It doesn't sound like this is going to be an activity. It sounds like this is kind of more of an activity where we have customers in a way, and therefore you would think it would be kind of a proprietary type fund. And B says an enterprise fund, which is one of our proprietary funds, so I'll keep that for now. And C says auto fund. It sounds kind of reasonable, but I don't think we have an auto fund. That's not one of the groupings we're looking for usually. And then D says the internal service fund, which is the other proprietary fund. So remember the groupings we have. We have the governmental funds, the fiduciary funds, and the proprietary funds. And then within those proprietary funds, we have these two kinds, the enterprise fund and the internal service fund. Now of these two, if we look at the question, funds to use for a carpool that services only government vehicles for a fee. So there's a fee, there's a customer activity, therefore proprietary fund, but it's not to external users, to customers that are outside normal citizens, but to internal government people, employees of some kind, and therefore it's going to be an internal service fund. So there's a fee, but it's to internal folks, and therefore D is going to be our final answer. Next question. Which fund may record depreciation? A, special service fund, B, permanent fund, C, internal service fund, or D, debt service fund. Let's go through this again using the process of elimination. Which fund may record depreciation? Now, when you're considering depreciation, note that you're kind of thinking of the funds that are going to be on an accrual basis, which we would record depreciation for, and those that are going to be on a modified accrual basis, which we don't typically record because they're on a short-term kind of basis. So we're not really recording the asset and the depreciation in the same way because that's kind of a long-term type of activity. And the modified accrual is modified in that oftentimes we're looking for that short-term kind of stuff. So which accounts use modified or non-modified is kind of what we're talking about here. The governmental funds, the ones in that largest group, usually use the modified accrual and therefore may not be recording the capital assets and therefore may not be recording depreciation. The proprietary funds, because they're business related, can be recording them in a similar type of fashion and therefore may still be using an accrual basis and therefore use and record depreciation as normally would be the case. So keeping that in mind, A, special revenue fund. So special revenue fund, I'll keep that for now. B says the permanent fund. So we can keep that for now. And C says the internal service fund. Now that's one of our proprietary funds. So that one kind of stands out. And then D says the debt service fund. And that's just to monitor the debt. So you would think that you wouldn't be recording the capital asset there or the depreciation on that one. So if we got these three, which one would we record depreciation? Special revenue fund, permanent fund, internal service fund. Special revenue is actually a general fund using modified accrual. Therefore, we're not going to have that one. Permanent fund, also general fund, modified accrual, not typically that one. C then is going to be our final answer. That's going to be our proprietary fund, customers being like the internal government customers, and therefore we use the accrual basis. Accrual basis has depreciation, records assets, has long-term activity. Next question. Proprietary funds include either A, enterprise fund, fiduciary funds, pension trust funds, and the general fund, or B, enterprise funds and internal service funds, C, general funds, special revenue funds, and enterprise funds, or D, proprietary funds are only used in for-profit organizations. Let's go through this again using the process of elimination. Proprietary funds include either A, enterprise funds, fiduciary funds, pension trust funds, and the general fund. So of those, that sounds, a long list. Let's keep that for now and see if we can eliminate some of the others here. B says the enterprise funds and the internal service fund. So that sounds pretty good. Now note the proprietary funds, we have our groupings. We have the governmental funds, and we got the proprietary funds, and then the fiduciary funds. The governmental funds are the longest ones, a lot more of them, and therefore you would think kind of A seems like it's more appropriate with this long list for them. And then B, 2 funds for the proprietary funds seems reasonable. Those look like them. And then C says general funds, special revenue funds, and the enterprise funds. So special revenue, you might think of it as proprietary. You might get confused and say that's proprietary, but that's actually a general fund, a governmental. General is going to be governmental fund, not proprietary. That's our main governmental. So C's not it. A has the general fund. That doesn't sound right, actually. And then D says the proprietary funds are only used in a for-profit organization. They're going to be similar in that they act kind of like a more for-profit kind of activity, but no, we do have proprietary funds. And the one's going to be the enterprise funds. So final answer, B, enterprise funds and internal service funds. Those are the 2 kinds of enterprise. Those are the 2 kinds of proprietary funds. Enterprise, if we have external people as the customers, like citizens, and internal service funds, if the people, the customers, the people paying are somehow within the government. Next question. Governmental funds include general fund, special revenue funds, capital projects fund, and enterprise fund. B, general fund, special revenue fund, trust funds, capital projects funds. C, general fund, special revenue funds, debt service funds, capital projects funds, and permanent funds. And D, general fund, special revenue funds, capital projects funds, debt service funds, and internal service funds. Now, this one's going to be the more confusing one, of course, because the governmental funds are the largest group. So we would have a long list of the governmental funds. So governmental funds include either A, we have the general fund. Notice that's in all of them. So the general fund is going to be a governmental type of activity. Special revenue fund, and note you can go through all of these. That seems to appear in all of them as well. So the capital projects funds, capital projects fund is not in all of them. So that's going to be one of the differentiating factors. And then the enterprise fund is not in all of them. So you're thinking these are the 2 differentiating items. And then B, general fund, we know that's in all of them. Special revenue, trust funds, that's a different one. And then the capital projects fund, that one is here. So you can see it here. And then we had capital projects funds up top. So that one's in 2 of them. And then C says the general fund, special revenue fund, debt service fund. That's kind of a new one. Capital projects fund is now in 3 of them. That's kind of more of an indication that it's a legit one. And then the permanent fund, that's the first time I think we've seen the permanent fund. And then D says the general fund, the special revenue fund, those are in all of them. Capital projects funds, I'm pretty sure that that one is 1 now because it's in many of the answers, which is usually an indication. And then the debt service fund, which is in 2 of these answers, and the internal service fund. And that's kind of a new one. So you'd want to go through basically these ones that are going to be different if we didn't know exactly, which is going to be the right one. And of these items, if A's got the enterprise fund, that one stands out. It's not in a lot of them, and that's not a general fund, governmental fund. That's going to be a proprietary fund. And then internal, so I'm going to cross out. The internal service fund is another one that's a proprietary fund, and it's not in all of them, so it's not going to be D. And then between B and C, we have the trust fund here and the permanent fund. The trust fund is a fiduciary. Anytime you see trust, it's going to be something a little bit different because it's going to be a fiduciary type fund. So the final answer is going to be C. Governmental funds include C, the general fund, the special revenue funds, the debt service funds, capital projects funds, and the permanent funds. Next question. Which is reported as a non-spendable fund balance? Either A, inventory, B, assets assigned, C, assets whose use is limited, or D, none. Let's go through this again using the process of elimination. Which is reported as non-spendable fund balance? Now, this is a bit of a tricky kind of question because when we think about the fund balance, remember what that means. It's going to be the assets minus the liabilities on the balance sheet. We have the fund balance. And then we had those allocations of the fund balance in terms of how, we can assign them with different levels of restriction because the fund balance is going to be the amount that people are going to want to basically assign out in terms of spending in the future. Assets minus liabilities, that's what we can use, that's what we can spend. And then we have these classifications whether we want to take that fund balance and restrict it in some way. So you would think that, there would be some kind of equity restriction on there or something like that. So the first one's inventory, which is the one you kind of wouldn't think would be on there because that's an asset. So how would that restrict the fund balance? And then the second one says that assets assigned, again, assets, how would that restrict the fund? And then assets whose use is limited. So this all may look a little bit funny, like how does that affect the fund balance, these assets that are involved? And what's happening, of course, is that the accounting equation is assets minus liabilities is the fund balance. And usually we're thinking about like a current type of assets when we're talking about a fund because we're using the modified accrual basis. And so when we think about the fund balance, anything that's on the books that's basically kind of like capitalized is going to be something that's going to be included in the fund balance, and that's going to be something that's restricted. So we don't have property and equipment on there because usually the fund is on a modified accrual. We don't have things like long-term assets that are because we're only talking about short-term activity. But we might have something on there such as inventory. So we might be tracking inventory, which is possibly supplies inventory that we expect to use in the short term, but we still have it. We're still tracking it. So inventory as an asset then is going to be recognized as part of the equity section. So anything that's related to the inventory as the asset that's within the fund balance, assets minus liabilities of equity, we want to assign out and say you can't use that because we already bought something with it. It represents inventory, which is on the books as an asset. So there's a little more complicated one. Final answer is going to be A, it's inventory.